There is a silent crisis happening in driveways across America right now. It isn't something you'll hear talked about at dinner parties, and you certainly won't see it highlighted on social media feeds. In fact, if you look around your neighborhood, everything probably looks like a booming success story. You see the gleaming chrome grills, the lifted suspensions, and the leather interiors of brand new trucks and SUVs that cost more than what our parents paid for their first homes. It looks like prosperity. But if you peel back the metal and look at the financial reality underneath, you find something terrifying. You find a mathematical black hole that is sucking the wealth out of the middle class faster than inflation, taxes, or housing costs ever could. If you have ever wondered why you work hard, get raises, and do everything right, yet still feel like you're living paycheck to paycheck, the answer might be sitting in your garage. Today, we aren't just talking about cars. We're talking about the single biggest obstacle standing between you and financial freedom. We are going to dismantle the illusion of the modern car payment, expose the predatory math lenders use to keep you poor, and show you exactly how a vehicle that feels like an asset is actually a liability that could cost you over $1 million in lost future wealth. If you want to stop bleeding money and start building actual net worth, you need to understand how this game is played, because right now, the game is rigged against you. To understand how we got here, we have to look at the normalization of insanity. Somewhere along the way, we allowed the definition of an affordable car payment to drift from a modest monthly expense into a mortgage-sized burden. The numbers are genuinely staggering. We are seeing average monthly payments for new vehicles pushing past $700, but that's just the average. When you look at the trucks and large SUVs that dominate American roads, payments of $900, $1,000, or even $1,200 a month have become standard. Think about that for a second. That is $1,200 every single month, leaving your family's economy and going into a depreciating metal box. The immediate question is, how? How are teachers, nurses, mid-level managers, and service workers affording vehicles with price tags that rival luxury sports cars? The uncomfortable truth is that they aren't. Most people are not buying these cars, they are renting them from the bank on terms that are financially disastrous. This brings us to the first major mechanic of the wealth trap, the loan term. A decade ago, a standard car loan was 3 years, maybe 4 or 5 if you were really stretching it. That timeline made sense because it roughly tracked with the depreciation of the car. You paid it off before it fell apart. Today, those standard terms are dead. To mask the skyrocketing price of vehicles, lenders have stretched loan terms to 6, 7, and even 8 years. They sell you on the monthly payment, asking, what can you afford per month, rather than what is the total cost of this truck? By stretching a $60,000 loan over 84 months, they can massage that monthly number down to something that looks manageable on paper. But here's the trap. When you extend a loan that far out, you are drastically increasing the total interest paid. You end up paying thousands, sometimes $10,000 or $15,000 extra just for the privilege of a lower monthly bill. Worse yet, you're locking yourself into a cycle of negative equity. This is where you owe more on the vehicle than it's actually worth. Because cars depreciate fastest in the first few years, and your long-term loan pays down the principal so slowly, you spend almost the entire life of the loan underwater. This creates a phenomenon that dealerships absolutely love. 3 or 4 years into your 7-year loan, you get bored. Or maybe the tires wear out, or you just want the new model with the better tech. You go to the dealership, but you still owe $30,000 on a truck that is now only worth $25,000. A rational financial decision would be to keep driving it until it's paid off. But the dealership has a solution. They will take your old truck, roll that $5,000 of negative equity into the new loan, and stretch the new loan out to 96 months to keep the payment the same. You drive away feeling like you got a deal, but in reality, you are now paying for the new car and the ghost of the car you just traded in. You have effectively turned your car payment into a permanent tax on your income that never goes away. Now, you might be thinking, well, I got 0% financing, so I beat the system. This is the second layer of the trap. 0% financing is almost never free money. It is usually a marketing shell game. The cost of that financing is baked into the inflated sticker price of the vehicle. You are either paying full price with zero interest, or you could have had a cash rebate and paid market interest. The banks always win. Furthermore, the qualification standards for these teaser rates are often incredibly high, meaning the people who need a break the most are the ones paying 6, 7, or 8% interest on a depreciating asset. But the financial mechanics are only half the story. To truly understand why we do this to ourselves, we have to talk about psychology. The automotive industry stopped selling transportation a long time ago. Now they sell identity. They sell masculinity, capability, safety, and status. When you see a commercial for a heavy-duty pickup truck, you don't see someone stuck in traffic commuting to an office job. You see them towing a boat up a mountain, or hauling lumber to a job site, or navigating a rugged trail. They are selling you a fantasy of who you could be. This emotional manipulation is potent. It convinces us that the vehicle is an extension of our self-worth. If you drive a beat-up sedan, you feel like you're struggling. If you drive a massive, pristine truck, you feel successful, regardless of what your bank account actually says. This is why people will defend their purchase so aggressively. If you tell someone their $1,200 truck payment is a bad idea, they don't hear a math problem. They hear an attack on their identity and their hard work. They view that truck as their reward for the grind, not realizing that the truck is the very thing keeping them in the grind. This leads us to the hidden costs that almost nobody calculates when they sign the paperwork. The sticker price is just the entry fee. We have to talk about the total cost of ownership. When you buy a massive, complex vehicle, everything costs more. Insurance premiums for a $60,000 vehicle can easily run $200 to $300 a month. Registration fees are higher. And then there's fuel. If you're commuting in a vehicle that gets 15 miles to the gallon, you are burning through cash at an alarming rate. Then there's maintenance. Modern vehicles are computers on wheels. A simple sensor failure, a cracked LED headlight assembly, or a transmission issue isn't a $100 fix anymore. It's thousands. When you add up the loan payment, the insurance, the gas, and the maintenance, that manageable monthly payment often doubles. A household with 2 newer vehicles could easily be spending $2,500 a month just on transportation. That's $30,000 a year, net income, gone, vaporized into exhaust fumes and depreciation. And this brings us to the most painful part of this reality check, the opportunity cost. This is the concept that wealthy people understand instinctively and that keeps the middle class struggling. Every dollar you send to a car lender is a dollar that cannot work for you. It's a soldier you have sent to die on the battlefield of depreciation rather than capturing territory in the stock market or real estate. Let's run the numbers on a hypothetical scenario. Let's say instead of buying that brand new truck with the $800 monthly payment, you bought a reliable, slightly older vehicle for cash or a much smaller payment. Let's say you freed up just $500 a month. If you took that $500 and invested it in a standard S&P 500 index fund with an average return of 8 to 10%, over the course of 30 years, that isn't just a little bit of savings. That is over $1 million. Think about that. The decision to drive a new, impressive truck every few years isn't costing you $50,000 or $60,000. It is costing you $1 million in retirement wealth. You are literally driving your retirement nest egg down the highway, watching it turn into rust and scrap metal. When you view it through that lens, the leather seats and the new car smells suddenly don't seem worth it. You are trading your future freedom for a current illusion of status. We see people making catastrophic sacrifices to keep this illusion alive. I've seen people stop contributing to their 401ks to afford a car note. I've seen people take out home equity lines of credit, putting their house at risk to pay off a car. I've seen people pick up second jobs, driving for rideshare apps in the very car they can't afford just to make the payment on the car they are using to work. It is a modern form of indentured servitude. You are working for the car is not working for you. So how do you escape this trap? It requires a fundamental shift in how you view transportation. You have to stop looking at vehicles as assets or status symbols and start viewing them as tools. A tool has a job to get you from point A to point B safely and reliably. Anything you spend above the minimum required to achieve that goal is a luxury consumption, not an investment. The goal is to get off the payment cycle entirely. This might mean swallowing your pride and driving a beater for a few years. It might mean selling that truck you love, even if you're underwater, to stop the bleeding, and getting into something cheap and reliable. It means paying yourself a car payment into a savings account, so when you do need a vehicle, you buy it with your money, not the bank's money.
The moment you stop having a car payment is the moment you give yourself a massive raise. Imagine what your monthly budget would look like right now if you didn't have that $700 or $1,200 outflow. That is money that could pay off credit cards, build an emergency fund, save for a house, or invest for your children's future. The system is designed to keep you in debt. The marketing, the loan terms, the cultural pressure, it is all engineered to make you feel like you need that new vehicle to be enough. But the ultimate flex isn't a shiny truck in the driveway while you eat ramen noodles inside. The ultimate flex is financial security. It's having a paid-off house, a fully funded retirement account, and the freedom to do what you want with your time. Don't let a piece of metal rob you of that future. Do the math, ignore the social pressure, and drive something that your future self will thank you for. Because at the end of the day, the only thing that truck is really hauling is your wealth, straight to the scrapyard.